All right, I haven't made any videos in some time. My last videos in October were to buy on the dip. So if you were buying on the dips, you would have been rewarded. This is a small cap fund. I was looking to uh, reduce my shares today. I was looking for a target price of 90. This had gotten down to 79, and I was wanting to get out at 90 today, and I thought for sure today I was going to hit 90. Um, so what happened? That would make me want to sell. Well, the Russell was up. You can see it early in the morning. It was up and it stayed up. Felt like it would close high. So that's one indicator. The other indicator I have is my direction small cap fund. It also ended up 3% higher. So that did well. And then why I didn't sell here. I looked at the holdings and it looked like it was not going to do well. So the current holdings, these are the current holdings for this company. So, or for this mutual fund. So when I looked up the holdings, they were all down. This is extremely disappointing numbers. I wasn't really sure why all these stocks in my small cap funds were doing so bad when the Russell 2000 and the directions was doing very well. And I take a look at the indices I normally follow for the Russell 2000. So the Russell 2000 represents all the small cap companies, and this is an ETF share of Russell. And these were both up a full percent. I felt like I should easily get to 89 from 89.08. The last high was 89.45 just the day before. I figured we would hit a new high and I would reduce some of my shares. I'm looking at all the other ones. RIDEX Russell 2000 went up 2% today. Fidelity small cap went up 0.5%. But the Vanguard fund I'm in my 401k actually lost money. And I'm surprised the number is that low considering how bad my top 10 were doing in that mutual fund. And even my other mutual fund, this one here is on a new high at 54.64, up 119. So I saw the top holdings. I was sure it was not going to do well. I've been holding shares, not selling, waiting for the jobs report. Friday's jobs report are the first real jobs reports we're getting since the government shutdown. So everything else has been kind of skewed up until now. The first real report is coming out tomorrow. I believe the market was going to spike. And the reason why I didn't sell any of my directions funds is because this direction fund is an ETF. An ETF can be sold like a stock. I can trade it anytime. I can wait for the report to come out. I think with the stocks all being on a high, there will be an immediate spike and then profits will come out. So I held off selling any of my small caps in the ETFs, but the mutual funds you will not be able to get out. So if we have the big spike in the morning and then it falls and it loses money, well, then you can't get out. You're just stuck. So mutual funds you have to hold and realize that you're going to get whatever the closing price is at the end of the day. And if the market goes down, even though it went way up in the morning, it's all about where it finishes. So I figured today it was not going to finish on a new high, which it didn't. And we'll see. Maybe it goes on a new high and stays high tomorrow. Maybe the market won't go down. If it does, I'll be looking to reduce shares. I've been doing a lot of other trades. I will make videos on what other things I've been buying and selling in the last few months.